S&P now down 10%. What do we do? Coming up here on the jog. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It is 8:13 here in the middle part of the country on Wednesday. It is February 23rd, 2022. Here's your morning jog around the economic headlines of the world. Let's start off with Lowe's. Nice Fortune 500 company. Sales beat. We've got housing going ballistic in this country right now, right? If you look at lumber, it's starting to go sort of parabolic again. Housing continues to be vastly undersupplied across the country, right? You have many millennials, this guy's generation, finally with some solvency, finally able to escape that student debt they've been paying for the last 10 years and looking to buy a home. Tremendous, real, operational reasons why you have housing demand here in the U.S. Lowe's doing really well on the back of all that demand. But the S&P is in a 10% correction. Now, for many of you, this may be the first real correction you've seen since the coronavirus pandemic, right? In your portfolios, perhaps you've been indexing all the time. You've had a nice, smooth ride from the low of March 2020 up till now. Now we have Ukraine, we have a number of other things going on. Hey, what do we do in our portfolios? Remember, it's a long-term game. About 90% of the time in the 10% correction, the market is higher 1 year later. That's a good thing. You have the odds going in your favor. And quite frankly, one of the things that folks say, every time you have a 10% correction, it feels like we're going down 35, 40%. If you want some strategies on that, go look at the in-depth investing podcast I did with Gavin Graham, about 8 minutes on creating a war chest, looking through strategies for how to insulate your portfolio before the market drops. You want to have some dollars that are set aside to buy when things are lower, if you can. If you're fully invested, you just ride it out. You have a long time horizon. Be fine with the volatility. That is what creates opportunities in the long run. I want to talk about some opportunities that are being scooped up by Apollo. They took Tenneco private for $7.1 billion here this morning. Shares up about 100%. They also took a local TV syndicate private yesterday. We're seeing additional M&A deals, additional companies being taken private. I think it's because rates are going higher, right? We've talked about this a little bit on previous shows, right? You have rates look to go higher. If you're a leveraged buyout firm, and Apollo certainly is one of them, you want to take advantage of rates while they are still a little bit low. 2 or 3 years from now, those deals aren't going to look nearly as attractive. Rates up, deals generally go down. Wouldn't be surprised to see additional flurry of action in the M&A space. Last but not least, let's talk about some innovation. Grubhub launching a rapid delivery service with bike. Now you might say, hey, Grubhub, they're already pretty fast, right? They bring food from restaurant to your door, takes about 45 minutes. Well, they're gonna start delivering groceries, little bodega style, knickknacks, bananas, maybe you need a little loaf of bread. 15 minutes. 15 minutes from order to delivery. Chicago, LA, New York. Commerce is just getting faster and faster and faster and faster, folks. Faster and faster and faster. Money is turning over faster. Companies are innovating faster. That is all a good thing for the economy. That is all a good thing for the market. If you want some additional information throughout the week, feel free to find me on the internet. I am out there. Until then, I hope you have a very nice rest of your Wednesday. I am out.